Hello there and welcome to our trading community. What I'm about to show you in this video is probably the single most important thing that you need to learn in your trading. This is a way of seeing price movement which is completely independent from indicators. If you can learn this and practice this method, I guarantee that it will change your trading forever, because this is pure price action, this is pure price movement. And what am I talking about? I'm talking about the basic movement of markets, which involve two basic things, and those two basic things are known as impulse and correction. The market is always in an impulsive wave or a corrective wave. Impulsive, corrective, impulsive, corrective. It goes on in every market, every day, all day long, all week long, all year long. The same thing happens over and over again. So it's very important that you understand and you practice this. It will change everything for you, and you'll see the market in a completely different way. I guarantee it. Anyway, let's remove that, and I'm just about to get into this. Before I do that, I'd just like to tell you a little bit about our trading community. There's 3 professional traders. We all meet up in a live trading room every morning, and basically we help traders trade. We send out trade signals, or we call them out live, and also we do live mentoring. We call it in the market mentoring. We believe the only way to learn to trade is to sit next to an experienced trader and watch them trade on a live market, and that's what we do. So that's what our trading community is all about. And there's 3 traders. There's myself, Roger, and Dal, and we all have slightly different trading methodologies, but we all complement each other as well. So there's something for everyone in our trading community. And as I say, that's live every morning, New York time. And we also send out trades, so you can make some money and learn at the same time. Anyway, back to this. So what are we looking at here? Well, this bar here that I'm looking at is the actual New York Stock Exchange open. So you'll see that the market previously made a high at this level. I'll just draw a little blue box in there. So it made a high, it moved down, New York Stock Exchange open, and it pushed up past this high. So this wave, or this movement, is known as an impulse. It's impulsive when it breaks the last high. This usually means we're now in an uptrend, and indeed we are. Okay, so it moves up, hits some resistance up here, and moves down. Now we don't know what this is going to be. When it's moving from here, to here, okay, we don't know what this is going to be yet. This could just keep pushing down and down and down and down, keep going, and take out this low. When this low is taken out, we would call this a corrective wave. This is corrective. Sorry, impulsive. Sorry, mixing them up. Okay, we would call this an impulsive wave because it takes out this low. But it is in fact a corrective wave. That's why I was saying that, because I was looking at it. So it corrects. Impulsive, corrects. Then what happens? We need to take out this high here for it to be a new impulsive wave, and it only just does that. So it's kind of impulsive, but quite a weak impulse, almost really returning back to the same level. But still, the correction is not as deep, meaning that it didn't go as low as this. So we're still in an uptrend, but it's a weakening uptrend. Okay, so push up, correct, pushed up, correct, pushed up, correct. So impulse, correct, impulse, correct, impulse, correct. Let's move forwards. You'll see here it corrects. Now, we don't know what this is going to be, but when this pushes down past this level, this white line, let me draw that. So there's the high here. There's the correction. There's the high. Aha, something happens here. What happens? It breaks the previous low. Okay, so now we know something. We know that this here is a new impulse wave. Okay, looking at it at this scale anyway. So it's kind of impulsive, this wave, because it takes out this low. Now you'll see that it reaches this level, does a small correction, and can't get through that level. Incidentally, it can't get through this earlier low. Now this is where a bit of experience is required, because really this was a shallow correction. This is a stronger correction, but we've got to be a little bit cautious here until we really get some good proof that it's taking the other direction here. Plus it's getting later in the day and the market tends to start to get a bit choppier later in the day. Anyway, so it pushes down, can't break through that level, and we have a new impulsive wave. So we're now kind of back into that. Now you'll notice that it impulses back up to this same level again where it touched here twice. So here's, you know, a clue about some resistance level. It corrects, pushes up again. So we know this is corrective now. So we know once it gets to this area here, we know we're in an uptrend, or it's trying to get into an uptrend. But it fails again. It fails to get through. Now the correction, if it had pushed through this level, would become an impulsive wave. Okay, if it pushed through this level, it would be impulsive, but it doesn't. It bounces and takes out this level. So this now becomes impulsive. Now this is nice here. It makes a new high, corrects, fails to make a new high, and then gets through this level quite clearly. So now we're in a downtrend, possible downtrend, impulsive wave. So using this methodology, you can really frame the market. You can really get an idea of what's going on at any given time. It's going to give you information. For example, here, if you're long, let's say you traded from here and you're long, you've bought. When you see this bounce here, correct, and it can't get through there, you've got to be thinking about getting out of your trade. Maybe your stop should be moved to this level here, below this level. Okay, to give it room, comes down, stops you out, you're in profit. Here again, hits that level. If we're thinking of trading long, maybe we get a signal here, maybe we have a indicator-based system that tells us to go long at this level. We now know something, don't we, from doing this. We don't want to be going long at this level. We want to see what happens first. Is it going to retrace? What is it going to do? Okay, we know there's resistance here. Now if we have a system maybe that tells us to go long here, that's okay, because we know we've got some room. From there to there, there's about 34 pips of room from here to that level. So at this level, we would say to ourselves, okay, I can go long here. I might have to get out here, but at least I know I have some room. Okay? So by doing this, you're defining and framing the market. It's very, very useful. And the only way to get used to doing this is to practice. Open up a chart and draw lines from high to low, and watch what it tells you. Just keep doing it. Spend a whole day, spend a whole week. I guarantee you it will change everything for you once you see this. Okay, so I just want to quickly show you one last thing here. I'm going to remove all these lines and blue boxes and objects, and I'm going to turn one of my indicators back on. Okay, so there's all of the lines removed. Let's turn the indicator back on. Okay, so here's my my custom indicator. This is the average range benchmark, I call it. Now I use this to help me define what I just showed you. Here's the impulse from there to there. The correction, what does it do, or what doesn't it do? It does not close below the band. Here, it doesn't close below the band. Okay, so this is useful now. When it pushes up, it keeps closing above the band. Okay, closes above the band. It's telling us, just watching this band is telling us we're in an uptrend. We're closing above it. We keep closing above it. Very important. Very, very important. This indicator is just priceless. Then we have a correction. What happens? The correction does not close below the band. Then we have an impulse. Goes a little bit higher. Then we have a little bit of a correction. We have an impulse. Keeps closing above the band. See? And then guess what happens? There's that one from earlier. It closes below the band. So just using this band can tell you whether we're in a trend. All the way from here we was in an uptrend. We were closing above the band. Now we're closing below. Now we're closing above. Absolutely priceless. Okay, that's it. That's me done. I've run out of time. Thanks for listening, and I hope you found this very informative. And please check out our website. We have lots of other videos. Thanks. Bye.